Welcome to week 3 of tax season, everybody. I hope things are going smoothly and you're on track to meet the deadlines. I know here at Pixel, we're putting in a lot of extra time to make sure the end of year goes smoothly. If there's anything we can help you with, don't hesitate to reach out. My contact information is always at the end of these videos. Today, we're going to be talking about the home office deduction. Now, this is one of those internal revenue codes that's simple yet complicated and can create some frustration and confusion. And it all starts with who can take the home office deduction. And the simple answer is anybody who is running their business from their home office can take the home office deduction. Unfortunately, there are some extra complications involved. Now, if you're an LLC that is being taxed as a sole proprietor or a sole proprietor, we have no issues. It's very simple. You're going to be doing a Schedule C, which is profit and losses from business activities, attached to your individual return, which is the 1040. And there's a worksheet in there for the home office deduction that we can fill out and attach directly to your Schedule C. It reduces your bottom line, you save a little taxes, you're good to go. But what if you actually have an S election or an S corporation or a partnership? It's not that easy anymore. Now, it used to be because individuals could, at one point in time, deduct job-related expenses that were not reimbursed to them by their employers, and we could put it on the Schedule A for itemized deductions and sometimes get a tax deduction for them. That was actually taken away from us on January 1st of 2018, so other things had to happen to make sure we could take that deduction. And the big thing that is being used is something called a reimbursement agreement. Now, a lot of people are working with their attorneys and their CPAs to determine, one, how to word the reimbursement agreements, and from the CPAs, just how much they should be reimbursing. But essentially what it does is it creates an agreement between the company and the owner or employee to reimburse those people for the part of their home that is being used exclusively for business. It is a non-taxable event, which means you're being reimbursed for something you've already spent money on, and everything really works. You get that deduction on the S corporation partnership side of things. Now, in the beginning, a lot of people were like, I'll just pay myself rent. I do not recommend that because rent is a passive activity that you can get taxed on. So I do recommend those reimbursement agreements. This isn't about getting rich off of your company in a tax-free way. This is about being reasonable and getting a reasonable deduction for your company while also reimbursing you for the use of your home. So that's something you need to think about if you are in a situation where you don't get to take the home office deduction in a traditional fashion. Now, there are some requirements in order to qualify for the home office deduction. And the first requirement is that the office is not only used regularly for business, but exclusively for business. Now, what does that mean? That means don't have a guest room in that office. It's not a craft room unless that happens to be your business. Your children aren't doing their homework there. You're not paying your bills in there unless it's business bills. Now, there are some CPAs who are so strict on this that they even tell their clients that they cannot have a picture of their family on their desk. Now, I'm not that strict because I think that's getting a little bit silly, and I've never experienced an audit and where that was the thing that broke the camel's back. But that's just how seriously the IRS takes it, and we're all well aware that the IRS takes this seriously in the case of an audit. So if you're going to take that deduction, you make sure that that space is for business only. The other thing is that it has to be your principal place of business. Now, there are very often times where people kind of split their time between home and another office. And if you are one of those people who is doing that, I think it is important that you have a conversation with your CPA about whether or not this is even a legitimate deduction for you. It's very important, again, that your principal place of business is your home, where most of your business activities are happening. It must be used exclusively and regularly for your business operations. It must be used as a place to meet with your patients, clients, or customers. And it's really, you don't have to have both of those. It's not all of them. It must be used for one of these, just so we know moving forward. It can be a separate structure that is separate from your house, that is used exclusively for business. It can even be a part of your property that is used for storage. So an example of that would be, I have some clients who are contractors and they have an office that they use as their principal place of business, but a lot of their large equipment is actually stored on their property. And so I will actually allow a deduction for them because they are storing their large equipment there on their own property. Now, it also can be used for rental. And daycares, actually, if you're running a daycare out of your home, there are some special rules that go with that that you want to talk to your CPA about. But clearly, if you're using your house as a daycare, you can also take that home office deduction plus a few other things. So make sure you're talking to your CPA. Now, there are also expenses that you can take in relation to that office, a portion of your utilities, a portion of your insurance, the property taxes, the mortgage interest. Although when it comes to the property taxes and mortgage interest, make sure you talk to your CPA because sometimes it's better just to leave those things on your Schedule A for itemized deductions than it is for the home office. It can very often save you more money doing that if you meet that criteria. It can be used for maintenance and repairs related to the office. Now, there are some things, for example, if you have your HVAC repaired, part of that can be associated with your office. But if you are having your lawn done by somebody, a landscaper, that is not deductible. So make sure you're working with your CPAs to make sure which part of the repairs and maintenance actually qualifies as a deductible expense for your home office. And then one of the other things you can take is actually a small amount of depreciation on your home based on the square footage of your office. And all of this is predicated on the square footage on your office. So make sure you know what that is as well as the square footage of your house. Now, with the depreciation, you have to be a little bit careful with because if you are ever going to sell your home because you know that it's not your forever home, you do have to recover that depreciation. It's generally not a lot, but something you want to talk to your CPA about. So as you can see, there's a lot involved with the home office deduction. If you are taking it, make sure that you understand it fully. You talk to your CPA about it or your tax preparer and make sure that you're doing everything that you need to be in order to make that as legitimate as possible. Now, it is said that the home office deduction is one of those things, especially for sole proprietors and LLCs taxed as sole proprietors, that does make you more vulnerable to audit. Now, I don't know how true that is. I haven't done the studies myself. I just know that that's out there in the nebulous information and internet, world. But they do say that it does make you more susceptible. So you also want to make sure that you outweigh the risks and benefits. I know some people who are so risk averse that they don't want to take the home office deduction just because it's been said that it does create that additional risk. So that's something else that you need to keep in mind for your own peace of mind. All right, everybody. Next week, we are going to be talking about more tax stuff. We'll make sure that it's very interesting. And I wish I could remember what it was off the top of my head. I have it all planned out, so sorry, but I promise it will be useful information. We'll talk to you soon. Take care.